Australia has emerged to become one of the richest nations globally. Data from the International Monetary Fund, IMF, shows that the country's gross domestic product per capita grew from 20,000 in the start of the 21st century decade to over 65,430 by 2023. The country's economic growth was praised by economists, global institutions, and world leaders. They saw Australia as a model for many other economies. Underneath this economic growth, however, is underpinned by a huge sum of foreign investments. Billions to hundreds of billions flew into Australia over the past 2 decades. This has built up infrastructure, hospitals, agricultural industries, mining, manufacturing, and so on. Foreign investments, however, basically come from foreign countries. It does not hail from Australia's own people and companies. It can come from the United States, the United Kingdom, or, for the country we are going to talk about today, which is China. China has played a massive role in the Australian economy. When we say massive, they are undoubtedly one of the key reasons for the economic growth rate of Australia today. A report published by the KPMG and the University of Sydney examining Chinese investments into Australia said that between 2006 and 2023, Chinese investments into the country accumulated a total of over $113 billion, a sum that is no small figure. But what makes this investment more appealing is that more than half of it was actually directed in just one industry: mining and energy. $70.8 billion went directly into the mining and energy industry of Australia. This is followed by commercial real estate, which received $27 billion of investments. Then infrastructure at $11.2 billion, healthcare with $9 billion, and renewable energy at $6.6 billion. These investments are one of the reasons why Australia is a major mining and energy destination today. It is why they have exports worth billions going to China and across the world. Data from the Department of Foreign Affairs and Trade shows that in 2023, Australia exported over 136 billion Australian dollars worth of iron ore and concentrates, $102 billion worth of coal, $74 billion worth of natural gas, and $28 billion worth of gold. Just like investments, trade plays a vital role in one's economy. They enable the exchange of goods, services, and capital between countries, fostering economic growth and development. This is why China, which is both a large investor and a big buyer of Australian goods, has been a vital piece of the Australian economic growth story. Yet, in recent years, China has not really received a good public image. Australians have started to distrust China. A report published by the Lowy Institute's flagship annual poll showed that public sentiment towards China remains notably low, with only 17% of Australians expressing trust in China's ability to act responsibly on the global stage. A total of 53% of Australians surveyed perceive China more as a security threat than an economic partner. Furthermore, a strong majority of Australians, 71%, believe it is likely that China will pose a military threat to Australia within the next 20 years. But underneath these uncertainties and distrust, China is still a big part of the Australian economy. One of the ways one can see this is through their investments and ownership of major Australian corporations. It is the fact that they hold a major sway in the Australian economy that makes them matter more than any other. Let's see just how big of a sway they have by talking about the major investments they have made. The most famous and single reason why Chinese corporations have a big sway in the Australian economy and corporations was made back in 2009. In the early months of 2009, Rio Tinto, a British-Australian multinational company which is known as one of the world's largest metals and mining corporations, struck a deal with the Aluminium Corporation of China, Chinalco. The deal was a $19.5 billion investment which would provide the miner with much-needed cash and enable Chinalco to double its stake in one of the world's largest resource groups. This agreement marks the largest ever foreign corporate investment by a Chinese company. This deal was met with concerns, especially with the Australian government. Some concerns have been raised that Australian regulators might not favourably view the Rio Tinto-Chinalco deal, especially after Treasurer Wayne Swan announced plans to tighten foreign investment rules. However, management from Rio Tinto needed this. Their chairman, Paul Skinner, saw how closer ties to Chinalco were expected to enable Rio Tinto to access funding from Chinese banks to support project development. He welcomed these investments as a growing participation of China in the global economy. Unfortunately, the $19.5 billion investment failed. Despite that, Chinalco still emerged to become the largest shareholder of Rio Tinto, which according to the latest data today, holds over 11.2% of the company, a stake that they acquired previously. This stake helped them make a lot of money from their investments. Rio Tinto, after all, emerged to become a major conglomerate. They are valued at over $107 billion, making them the third most valuable public company, just behind BHP and China Shenhua Energy. As one of the world's largest mining companies and one of Australia's most important corporations, they hold a sway in the country's economy. In case you've forgotten, this is just one of the many other major investments out there. One of the recent concerns in Australia today is the country's real estate market. Many Australians are struggling to find homes, and even if they do find a home, in most cases it is overpriced in rental. Many people have voiced concerns about this. They say that it is because of foreign ownership of Australian properties. Whether that is true or not, what matters more is that Chinese investors are amongst the largest landowners in Australia. Data from Australian news site news.com.au shows that China owns over 9.2 million hectares of farmland, making them the second largest owner just behind the United Kingdom with 10.2 million hectares. Additionally, one of the largest foreign investments into Australia's commercial real estate market occurred in 2015, when the Chinese sovereign wealth fund China Investment Corporation had acquired 9 office towers in Australia for over $2.45 billion. The Australian Financial Review called it the deal of the year. It was also the largest direct real estate transaction in Australia's history at that time. They showed that the portfolio had a fully leased income of approximately $145 million. And it included stakes in premium buildings such as 120 Collins Street in Melbourne and 126 Phillips Street in Sydney. Finally, probably the most important and controversial investment targets are done in no other than Australia's infrastructure landscape. In 2016, an Australian-led consortium with Chinese investment secured a 50-year lease on Australia's largest container and cargo port for $9.7 billion. The Port of Melbourne, which handles more than 3,000 ships annually in 2016, was acquired by a consortium that includes Australia's second-largest wholesale funds manager, Queensland Investment Corporation, QIC, and multinational firm Global Infrastructure Partners, GIP. An Australian newspaper reported that GIP was partially representing China's sovereign wealth fund, CIC Capital, which effectively secured a 20% stake in the port. Back in 2014, another deal was signed with Chinese corporations. The Port of Newcastle, which was known as the world's largest coal port, had been sold in a deal worth $1.75 billion. The acquirer was a consortium comprising Hastings Funds Management and China Merchants, which won the bid for this New South Wales government asset. A year later, in 2015, the Landbridge Group of China had signed a 99-year lease for the Darwin port, worth just $506 million. This major investment was marred by controversies. The company, according to various reports, had close ties to the Chinese Communist Party, which raised national security concerns. A defence analyst from the Australian Strategic Policy Institute stated that the primary concern was not covert surveillance, but the potential for Chinese government influence to curtail investment in the critical asset. So, just how important is China to Australia? Well, they are indeed one of the country's most vital economic partners. Even though Australian views of China have degraded over the years, one cannot disregard the economic impact they have brought to Australia. What is even more is that in the future, China's economy will continue to grow, implying their continued role as Australia's largest trading partner. But anyway, do let us know what you think. Thanks for watching.